Are they being cautious, or is there a realistic change? It's a Macquarie con call is what I understand, where Macquarie brokerage did a call with the CEO and the CFO, and they are definitely alluding to the fact that they expect that the impact of the second wave is going to be felt. But markets would say that what HDFC Bank has done is they pretty much have stated the obvious, which is that we all know that in terms of the number of cases in the second wave, and the total mortality rate is much higher than the first wave. And in the first wave, you had a huge advantage because of the RBI moratorium, which in a sense was able to give benefit to banks. That factor is not at play, at least at the retail end. Now, HDFC Bank, we also know that has a very large retail franchise, and on the retail franchise, I think there is going to be a hit which cannot be overruled, or which is expected. But HDFC Bank in a sense has not been the best performing stock in last couple of months. Let's look at the YTD change in State Bank of India, SBI and HDFC Bank. I'm just trying to bring the point out here. Let's just do that again. Now that's the 3-month change in HDFC Bank. The YTD change in HDFC Bank this year is just 73 rupees. That's 5%. Now hold the data there. Flip it around with SBI. You will see that SBI has been a marked outperformer, and ICICI Bank is up 20%. Now let's look at SBI. SBI is up 50%. So I guess the markets are telling you which way they are leaning. And the star outperformer stock, which is HDFC Bank, has been a ranked underperformer if I compare that with SBI or even ICICI Bank. So what are markets telling you? That lean towards corporate banks, lean towards banks which in a sense have really cleaned up their book, and lean towards banks which have gone through a cycle of crisis, so to speak. Now HDFC Bank has not really gone through a rather painful cycle of NPAs, or they've not really had a big dip in last couple of years. That's not the case for ICICI Bank and State Bank of India, which in a sense have really cleaned up their book. So that is something which markets are recognizing. And also markets know that right now you could align with banks which are more corporate facing banks, which in a sense have ability to lend and which are running a large corporate book, because the shape of the economy definitely is going to change from being consumption oriented to being investment oriented, because corporates right now do understand that if they invest and commit to capex right now, the benefits would be felt in 12 to 24 months. So markets are telling you something, the stock price is telling you something. Is HDFC Bank saying the obvious? The answer to that is yes. But the chink in the armor, so to speak, for HDFC Bank is that they've never been so vocal about admitting that, oh, there is going to be a huge impact of the second wave. So that is something which is not puzzling, but has come as a bit of a surprise to me, because when we heard the SBI management, let's say on Friday, and when I asked the management on the second wave, they were reasonably confident that the second wave will also sail through despite the second wave. So has the HDFC, it's not a profit warning, but indication, has this come like a bolt out of the blue? The answer to that is no. Is it something which is going to make markets nervous or disturb the rhythm in the market? Well, the stock is already underperforming.